What's going on here? I mean, I guess there's just an incredible appetite right now for hot, sexy IPOs.
Yeah, there is. And to be honest, there has been all year. And there's a lot more that are going to be coming in 2021. I think part of what it is with a company like Airbnb is that I think investors looked at their IPO prospectus and said, wow, they took this massive hit, right? This massive hospitality hit. They were able to, to use the cliche, they were able to pivot into more long-term rentals, really up their domestic use. And they were able to not only survive it, but to thrive. At one point, actually turning profitable for a quarter and thinking, you know what, this is a pretty well-managed company. If and when the economy comes back in the middle of next year, they're going to be able to just build on that old momentum and then maybe add some new tricks that they've learned.
Yeah, they seem to, I guess it was in the most recent quarter they made some money. Year to date, they are negative because of what happened in the first half. Have they made money before that quarter? Or do we know?
They had. In 2 prior years, they actually had made money. Not much. I mean, they were never a wildly profitable company. And, if they had spent a little bit more on marketing or a little less the following year. But yeah, they have been. And to be honest, this valuation that they announced this morning, this increase of the shares, it brings them up not only twice what they were valued at earlier this year in kind of an emergency bailout round in the private market, it brings them kind of a little bit more to where they had been valued in their last real private round. So kind of the growth trajectory from a pricing perspective makes a good deal of sense.
They certainly have Airbnb, that is, if not first mover advantage here, they have a branding advantage because their name is associated with these kinds of short-term or longer-term rental usages of condos and homes and so forth. There are other players in the market, but I bet their share is the biggest by far.
It is. And then they've got the secondary advantage, and it's almost an unfortunate one, just from a broader economic standpoint, which is lots of hotels are either going out of business or on the verge of going out of business. And there might come a point where when everyone finally is able to, leap out of their houses and want to go travel, Airbnb is going to be where they probably go because a lot of the places they would have gone a year ago, 2 years ago, just don't exist anymore. Maybe aren't able to staff up to be at full capacity.
Let's get to DoorDash, but I would just point out that David Balin at the top of the show made the point that you just made, and that is that 2021 is going to be, in his view, Citi's view, a year where people exchange the stay-at-home trade for the get-out-of-home trade and start to move back into having experiences the likes of which Airbnb supplies. Let's talk a little bit about DoorDash. Where do they stand? When are they coming? And what do the numbers look like?
DoorDash is supposed to price its IPO tomorrow night, Tuesday night, begin trading Wednesday morning. DoorDash is a tricky one, right? Because as you know, because of the pandemic, because of work from home, stay at home, lots more people this year have been ordering food. And they acknowledge inside their IPO prospectus that their biggest risk factor is that 2020 has been a bit of an outlier in terms of volume. That said, they've done a better job getting close to profitability and even occasionally turning a profit than have their rivals, namely Uber Eats. And this question of, home food delivery has seemed like this, failed economic model. The more volume you have, the more money you lose. DoorDash seems to have figured out a way to turn that trick a bit in a way that Uber hasn't.
Shepard Smith here. Thanks for watching CNBC on YouTube.